Let's bring in our friend Jeff Kilburg, KKM Financial founder and CEO and a CNBC contributor. He joins us for a special three buys and a bail bank edition. Let's start off with Goldman Sachs. Higher today after posting a revenue beat boosted by strength in asset and wealth management. Shares up more than 20% since November. You think it can keep going?
I think it can, Ty. And Goldman Sachs, when you talk about them being one of the big banks, you have to remember that they do such a great job, and most of their revenue, nearly 45% of their revenue, is derived from trading. So they had a great year trading. Yes, they did lag, only being up 16% in 2023, but this is a name I think you can own, and I think the banks by broad swath in general, you're seeing the gut punch being assessed by the FDIC, this one-time assessment. They're still bailing out SVB, Silicon Valley Bank, $16.1 billion. So the overarching theme today of all these banks being in the red is due to the fact that they have to pony up. And you're seeing Goldman push up about $529 million going into that insurance fund that got depleted from Signature Bank as well as SVB.
All right, let's go to Morgan Stanley, moving the other way after earnings revenues beat expectations. But that FDIC payout and other regulatory settlement cutting into earnings in the first report under the new CEO, Ted Pick.
Yeah, and I like Morgan Stanley here. I think if you look technically, Ty, it's right up against its 50-day moving average, potentially offering some support. But you have to remember, they paid $286 million into that insurance depletion. So you're seeing all these big banks above $5 billion really get a haircut today, or a 2x4 to the back of the legs, it feels like. And I think there's an opportunity, though, as you continue to see the wealth management side of Morgan Stanley grow and provide revenue. I think Morgan Stanley is another aim I want to own.
And the third buy on your list is JP Morgan, the sort of granddaddy of American banks.
It is, Ty. I mean, a market cap of nearly $500 billion. This is an essential 40 portfolio name. This is an essential bank to the U.S. economy, to American way of life. And you see revenue. They had one of the best quarters. And we go just back to last Friday, that trading action. That's what we look at when we're trying to trade this and have a better understanding. So in the wake of that trading report, which was phenomenal, that was one of the best earnings reports they've had, you saw it go up about 3%. And sure enough, as shareholders realized that they were getting a punch to the gut of about 74 cents per share because they had to kick in nearly $3 billion to the coffers for the SVB and Signature Bank debacle we saw back in 2023. So I think you think about JP Morgan above its 50-day, above its 2-day moving average. This is a bank we want to own. But if you look in the bigger picture, 2023, this was the best bank. This is the best bank of anything we talked about.
It's funny. I think
30%.
I think of being a shareholder in some of these banks kind of like being a member of a condo association where you get hit with an assessment at the end of the year to repair the curbs or something. All right, now for the bail, and that would be Bank of America reported last week missing on revenues as loan growth slows down alongside economic activity more broadly. Why the bail here on this one?
I'm bailing on Bank of America for a couple of reasons, but primarily, Ty, you saw last year when we saw interest rates move higher and the net interest margin, all these banks were doing the backstroke and swimming in cash in, you saw profits actually move lower in 2023. So that was a really hard pill to swallow as a shareholder of Bank of America. When you see that revenue drop the way it did, it was 50%. It was $7.1 billion. It went down to $3.1 billion in 2023. So I think Bank of America is a bail as they have a lot of hard months ahead to kind of react. But at the end of the day, they're coughing up $2.1 billion as well to put in this insurance fund that SVB and Signature Bank. And yes, I keep on saying SVB because I can't believe we're in 2024. We're still talking about that regional bank chaos.